Welcome to the Common Sense Investing, or CSI Show, with Victor McClure and Guy Allard from McClure Capital Wealth Management Companies. Victor and Guy will use their combined 60-plus years of experience to answer your financial questions with their own brand of plain-spoken language and hard-hitting style.
Welcome to the Common Sense Investing Show. I'm Victor McClure.
I'm Guy Allard. Hey, you always laugh when I say my name. That's not very encouraging.
I think I'm the play-by-play guy, and you're the color analyst. I think that's
Yeah, well, the color analyst is the one that's actually had physical experience with doing this
paid
stuff.
More on
and
that
the play-by-play, I'm just saying.
They're just talking heads.
Hey, are you going to tell our wonderful listeners that we have an opportunity that a week from Monday we'll be at the closing bell ceremony?
For the New York Stock Exchange?
New York Stock Exchange?
We've both been doing this 30-something years each, and we've never been to the New York Stock Exchange. Maybe because we hate New York.
Now, if you're from New York,
we love the people.
The people are nice. It's your city,
Oh, my son lives in New York. I can't stand it. He goes, "Isn't this wonderful?" I go, "No, I've had like 15 people bump into me, and I've just walked to the end of the block."
Oh, that's
and they're
right.
not mean. It's just crowded, I'm like, oh.
The funny thing is, they told us at first, or at least they weren't specific and they didn't lead us to the right conclusion. We were under the impression that we would be ringing the closing bell. Now, we understood that wouldn't be just Victor and I up there on the balcony above the clock ringing the bell. Figured there'd be 40 or 50 people and we'd be in the group like they're...
Get our picture with the bell,
Yeah. And I was asking him now when it's all done, well, Victor and I at least be able to get up there and take a picture. Oh, no, you're not going to be on the balcony. You're going to be on the floor.
No, this is after we bought our tickets.
Oh, yeah, everything's committed, yeah.
Now, we are doing Roger Ibbotson.
Yep.
We're going to be watching him speak. Robert Schiller. Roger Ibbotson.
Actually,
Roger
be specific
Schiller.
for our group, I believe.
That's right. They're very, very good. Remember we talked about the Ibbotson's the biggest pro stock guy ever. He's the one that invented the Ibbotson charts. They don't have many more because everything's gone advisory instead of brokerage thing. But back then, every brokerage firm you'd ever walk into, I don't care if it was Merrill Lynch, whoever,
had the chart.
They had the chart when you walked in. If you invested in stocks, look, $1 worth $5,000. If you did in bonds, it was $40.
That's right.
So you're like, oh my gosh, stocks are the only thing. He's also the one that came out and said bonds have an issue, and if you put index annuities, the ones with no caps, they're more the accumulation style more than the income style, that they will lower your risk every time, just about every scenario, and increase your return every time. And so, remember, if you want a copy of that report, we'll be more than happy to send it to you. It's 972-715-2424. Again, 972-715-2424. You can always go to our website, ilovemyretirement.com. We'll be more than happy to send you a copy of the Ibbotson report.
Easy for you to say. Now, before you get into your axis of evil, I know you're headed that way today.
Oh, my axis of evil.
Your axis of evil. Keep in mind, right now, we've talked a lot about rebalancing. We talk a lot about the three buckets, right? Liquidity, income, inflation hedge, just because it's so important, so crucial. It's the core of it's a foundation, if you will, of what you build your portfolio on. You always have the people that always say the market's going up and you should never get out, and that's where you should be, always in stocks. You always have the guys that are consummate bears, right? The market's going down. Can't you see the charts? The writing's on the wall. It's the largest bull market in the history of mankind. Don't, run. Right now, you'll hear a lot of people. The bears are the bears. They're always saying the market's going to crash. It's been too long. PEs are bad. But if you notice, even the bulls, the people that are pro-market, saying we're starting a new cycle, things are good, the economy's good, short of tariffs causing issues or something coming along. Two real key things I've heard in this last week. One is they think that if something happens to curtail the market, it'll either be interest rates, getting too high where it's being competitive, and they're thinking that number's about 4.5% or 5%. And the other is that the event that would happen probably would be from the EU, European Union, whether it's Italy or something like that. But even where I'm going with this, and I digressed a little, even the proponents, even the bears for the market are telling people to take some off the market. And they're talking about gold, they're talking about bonds, fixed annuities, things that are safe, things that are guaranteed. So instead of us beating a dead horse and telling you that's what you need to do, If you have your 3 buckets in order, you've already done it. So make sure your 3 buckets are proportionate to your goals and your age for retirement. If you're not quite sure what that is, call us. It's an easy thing. There's no obligation, and we can kind of help give you some guidelines.
Yes, 972-715-2424. Again, 972-715-2424. That gave me a thought, Guy. I was thinking, I was talking to 2 of our clients, long-term clients, both business owners. One owns a company that makes steel products.
Right.
Railing for commercial buildings and stuff like that, like
Sure.
the handicap railing, all that stuff, or the ornate stuff.
I know who you're talking about.
And talked to them, and they said, I can't lock in prices
Quotes?
for like a day or 2. So you put a bid in for a project, and this is from the tariff stuff, right?
Sure.
I cannot get any steel prices to do anything. They're going crazy. And so there's a lot of issues because, remember, tariffs can protect the U.S. steel industry, but there's, I think they said 50 times more businesses that do steel products that are all now being affected. I'm not affected. I'm not going pro or negative tariffs. I'm not, but I'm saying that could be a potential issue. I also talked to another client, long-term client of ours, owns a company that does apartment buildings. They build apartment buildings. A lot of them specialize in low-income housing, stuff like that. Well, they're trying to lock in rates, and they said lumber prices.
Interest or material?
Material rates. Like they put a bid in. Hey, here's how much it's going to cost.
Got it.
But like lumber has gone up like double in 2 or 3 years. Steel, forget about it. He goes, he's having deals where he can't lock a price on product for 30 minutes. So it's getting the economy's going great. We got unemployment and everything, but there's stuff on the horizon that looks like that can cause real issues. What is the engine behind a lot of this economy is real estate. It really is. The building of real estate, houses, apartments, commercial buildings, it's gone all over. Well, this is becoming a huge issue for these builders and these, commercial developers. And so I'm saying that is just that's just 2 different small unrelated industries and how they can affect the economy, because think about it. If you're bidding a project, right, you got to put bids in to win bids or whatever, and you can't lock in a price for 30 minutes. There's no way you can lock in profit. And so I've talked to one of them, and they said, by the time the bid is accepted, if it's 2 weeks later, I'm losing money on the deal now.
Can you imagine? If you play the futures market, 2 things determine the price. How long out you're going to go, how long you get that option to buy or sell, and the volatility. If the market's not moving, it's cheaper. If it's moving like crazy, it's expensive as heck. Can you imagine the cost of the future market right now?
I think there's no way to hedge this.
It would cost more to hedge than just take the gamble, right?
I didn't realize the lumber price had gone up so much, because I was thinking about buildings, and I was like, one of our rental properties, I'm like, oh.
You know where we get our lumber from other than us? I think it's Canada, isn't it?
Dang Canadians. No.
Yeah.
I don't know. But I'm just telling you, those are things that,
Real world.
Being advisors for this long and having this many diverse clients. Remember, engineers are probably my number one thing, then business owners, doctors, not as many lawyers. Don't know if I want them. Just kidding. Well, let's talk.
I have some very good attorneys that are clients and personal friends.
I do too.
He did not mean that.
But it was funny.
Yeah, it was funny. That's right.
All right, I really wasn't going to my axis of evil.
I saw your first page there about all the fees they're paying. I'm thinking, here we go.
But it does dovetail into that. What I was going to say, so I'll briefly talk about it. All right. Guy, who's in my axis of evil?
I know the banks are for sure.
The banks are there for sure, remember?
They're number one.
Like, go to a bank right now, okay? Not all of them are like this. Some of you bankers are wonderful people. But I remember before, you go to that drive-through line, there'd be 10 tellers for the drive-through, another 10 for the walk-in. You go in now, one person's juggling both of them. I got 3 people in the car line, 5 in the line, and I'm like, or you go in there and it's like, well, could you hold on a second? There's 4 or 5 people on each side just look like they're doing nothing, but they can't help you.
Let me add to that real quick.
And they want to charge you a fee every second.
Last week, we're going out of town. We mentioned that to New York. My mom wanted some cash. She just wanted to have some cash around the house. If anything happened to me, whatever. She's
old school.
Yeah. So she used to work for Motorola, Employees Credit Union. They don't have a credit union here, but In Touch, and there's a few, Randolph, there's a few that are sharing unions. So I looked them up, the closest one in the office. I walked in, I looked to the left, I looked to the right. You know what there was? There was 6 ATM machines with videos, and then a couple people in their offices, oh no, you can go over here. You go to the teller machine, and some guy in some office, who knows where, pops up in the video screen on one of the 5 teller machines. I kid you not. Now here's the issue. You can't get quarters. You know, she wanted quarters for laundry, like $50 worth. You're limited to $500. She wanted to pull $1,000 out just so she had. You couldn't do anything. The denominations, the quarters. So I had to leave. I had to go to my bank, get it done, and then somehow make the transfer
well, it's
later.
Like if you do this online, there's no charge. But if I do this, like, wait a minute, to do anything with my money, there's a charge if I need to actually speak to a person. Are you kidding me?
Oh,
pretty soon it's going to be a charge just to look at how much money you got in there.
I had to take a picture and send it to my mom. I said, "This is the bank."
It's just like also
it's automated.
Those deals, okay, they already charge ridiculous amounts for credit cards, right?
Yep.
Let's say it's 8-10%.
In a low interest environment.
Yeah, lowest in history.
Right.
But if you're late on one of them, all of them can raise you to 30%. And so that's why they're in my axis of evil.
All right. Sorry for digressing on you.
We have a lot of bank clients, and I'm just saying the way the banking industry has gone, that's where it is. All right. What's the other one? Airlines. Airlines are still in it. Yep. Airlines.
I didn't know you were pissed off at airlines.
Pissed off at airlines.
All right.
Well, don't you remember you got a meal if you were in coach or whatever, didn't you?
Sure.
Now you got to pay to get some crappy-ass sack lunch.
Peanuts and the Coke.
Here's your peanuts, like throw it across the room. You get one. Now, let's say I want a Coke, right? Well, you can get one, but by the time that cart gets to you, you're almost there. Or you need a refill, forget about it. The dang thing takes an hour to get back. It's terrible. And they made the seats half the size.
I'm not buying. You're in first class behind that curtain anyway.
Well, when I look back there, I feel bad. I'm just saying.
Okay. I just wanted to clear that up.
I'm telling you, sometimes I don't have first class. I'm just saying.
Remember how
my knees are almost touching. I'm 5'10". My knees are almost touching. Then they lean the thing back, and I want to lean mine back too. I'm not blaming them, but it's hitting my knees. I'm like, what cut? There's no room. They go, we figured out a way to get 6 more seats per plane. I'm like, you chicken.
Remember how easy it was? We've taken some trips together with our wives to Hawaii and Europe and a few things. 700 miles or so. It was real easy to use the miles to get to upgrade to first class for free.
That's right.
Now it's hard as hell, and you got to pay $250 fee or something.
I know a lot of people like Southwest. Oh my gosh, it's great. It's great. Blah blah. It's like a cattle call. If you don't get there 2 hours early, you're not going to be in line to get a good seat, and it's just like a rush for the exits, man, or entrance.
And for the overheads, if you don't get there in time, you can't get your baggage stowed.
But there's so much stuff with the airlines now that make mess. So they're part of the axis of evil.
I'll go back to the banks. They're easier to pick on.
Who's another one? Electric companies. Your utility companies. They seem to remember they used to go, well, natural gas prices went up, and that's where our electricity rates are tied to. We're going to have to raise all your electric. I'm like, all right, that doesn't seem right. Natural gas goes down. Did they lower it? No, we need to raise it again. Cricket. No matter what, it just keeps going up. Water rates. Remember, we were under.
I got my first summer water bill, $400.
Remember, we had a drought.
Instead of $150.
This was like, I don't know, 5-10 years ago. We have a drought. We're going to have to raise water rates. Now, we've been flush with water for years now, and they keep raising the rates. Why is that? You got no excuses now. Well, it's going to be, we got to reroute some water. We got some zebra mussels over on this. Give me a damn break. So they're part of my axis of evil. I might have forgot the 4. I think it was a 4, right?
That was 4. If you count water, electric, airlines, and banks.
Utilities, I kind of mixed together. I'll think of one in a minute.
All right.
But that does dovetail into the next topic.
Very nice.
Okay.
Segue.
Somebody asked one, there are positives and negatives about being with small firms like ours, boutique operations like ours. We've been financial advisors. We have more experience than most people.
Small?
Yeah. Well, we're smaller than Merrill Lynch. How about
okay,
that?
That's
Fidelity. And there are benefits to big ones.
Yep.
Sometimes, I try to do both. All our managed accounts are at Fidelity. So you get the customer service, the knowledge, and the experience of an individual advisor, but you're at the big firm.
You're not captive, and we're not captive.
My cousin works there, and until you have about $3 million, you're in the bullpen with the kids. By I mean kids, At my age, anybody under 40.
Yeah.
And they're in the bullpen and they're learning on your money. So, not a big fan of that. So, but there are benefits. Makes you feel better, all that kind of stuff, right? But somebody said, how do I know that you're legit? And I'm like, well, 30-something years and not one customer complaints. Pretty good.
It's a good
He
place
goes,
to
yeah,
start.
but I go, so I started looking up because I get these reports. Anytime FINRA finds somebody, the SEC finds somebody, or there's a big settlement, and holy moly, if you look at the firm, Merrill Lynch has been destroyed here just the last 3 months. $15.7 million fine for overcharging clients on mortgage bonds. $415 million for fraud. $42 million. This is in the last couple months. There are billions. Every single firm that you've heard of has paid billions of dollars. I'm not saying individually billions, but combined billions of dollars.
Aggregate.
Most of Merrill Lynch is the top one if I can find. Now, that's my research. Hopefully it's not flawed, but it's billions for doing fraudulent things, failure to supervise, overcharging, misleading clients, all this kind of stuff.
Omission.
I'm just picking, because all of them have it. I just said we have our accounts at Fidelity. They have some too. Now, my research said they have less than most of them, which is good, right? But they have it too. But the ones that are the king of the king, remember I said my axis, I didn't put Goldman Sachs or Charles Schwab in my axis of evil. I put the banks. Well, some banks are brokers.
That's right. They get rid of the rules.
They got both, right?
That's right.
Who's the biggest payer of fines and settlements in the world?
Probably the bank and...
The bank we both bank at for 30 years. Yeah, Bank of America.
That's right. That's right.
I'll give you an example of how many fines and settlements there are. $77 billion. And this might not be updated. This could be a year or so old. J.P. Morgan, $40 billion. Citigroup, $18 billion. Wells Fargo, $10 billion. Now, these are billions with a B, folks. BNB, but UBS, $6 billion, $9 billion. Deutsche Bank, $5 billion. Morgan Stanley, $5 billion. Barclays, $4 billion. Credit Suisse, $4 billion. That's a lot of fines and fees. Not saying that it's all everything, but remember they used to sell those credit default swaps and call them tax-free money markets.
Yeah.
Every one of them did, and they paid billions in fees, fines just for that. There's no such thing as a tax-free money market, folks. It's impossible. It's illegal. Only thing that can be tax-free in the investment side would be a municipal bond. So they were auction rate securities. As long as the auctions happened, you had liquidity. What happened? The auctions dried up. Everybody starts losing money.
If you get the opportunity to watch the movie The Big Short, if you're into this like Victor and I, it tells a pretty accurate story of what happened when they were packaging mortgages up and selling them to municipalities, to other countries, foreign countries, the whole 9 yards, which is fine, but the whole big deal was the rating company. We won't go into them. There's only 3 majors, so you can probably figure it out, but the rating company was keeping the grade, the AAA. They were keeping the packages. They were rating them much higher than they were when they actually, some of them were junk, and the default risk was extremely high. And the more this came out and the more everyone was aware of it, they wouldn't budge. There people were short in the market because they knew it was bad. They were shorting it, but they wouldn't come off of their ratings.
They wouldn't pay their shorts.
That's right.
They almost killed the exchanges because they've got to pay those shorts.
They did, but it took a long time to get. Right. This like our politicians, they just drag their feet. Right. I mean, LPL just paid a $26 million fine for illegally selling some securities. This is all over. Would you do business with someone like that?
Right. Now let's have full disclosure. 10 years ago, I paid a $2,500 fine for failing to do a form. The one thing is, we're 4 different government agencies monitor what we do. And so the rules are different sometimes between them. And if you miss one but forget, do 3 of them but forget the one on a piece of paperwork, you got an issue. So, and they're a lot bigger volume, right? So I get some of that. But there is no excuse to pay almost $80 billion.
That's right.
that means you're doing bad stuff.
Over and over and over.
That's right. So I'm just keeping everything in perspective. I've always been a small firm kind of person because I like personal attention. I don't want to be a number. And what I mean by that is if you've got $100 million, $200 million, $1 billion, you're not a number. You're going to be well taken care of anywhere. You just are. Let's be honest.
Yep.
But what if you got $5 million? They might say they'll put you. The one thing that always gets me is the private client group. No, you don't have to go down to that teller. You can go up to the 6th floor. It's a bunch of BS.
The buzzword was private wealth management.
Yeah. As long as you keep $3 million with them, it's going to be private. It's all BS. It's marketing 101.
You notice the commercials from the different advisors that are trying to get you to call them because they want to, manage your money. If you have $500,000 or more, call. Right. So what they're telling not the small guys to call, just the big guys.
And don't get me wrong, everybody likes bigger clients. Don't, it's like Jimmy Johnson. He said, well, if Troy Aikman was late, I'd say, Troy, could you try to be on time? If that kicker's late, he's fired. Get out of here.
Troy was sleeping in a meeting and say, you might want to listen to this.
So life isn't fair. Yep. Nobody's ever going to pretend that bigger clients don't get more attention. I don't like it, though. If you're a good, hard-working person and saved $1 million or $500,000, you should get the same attention as somebody's got $20 million.
That's right.
Maybe that $20 million guy inherited the money, never worked anyway. You never know.
That's funny. Victor and I were talking earlier, and we both have some clients that we were working with, and I think you were working on a $500,000 or $600,000 deal, or a relatively smaller client, and you said, Guy, these are the ones that I really get satisfaction in helping, and it's very true.
We were trying to do an income thing because what they had was they have an issue where they get too much income coming in. They got really expensive prescriptions.
I was going to say taxes.
And they're already retired on fixed income.
Right.
And so we're trying to figure out ways to do it without creating too much income. But I do get a lot of satisfaction out of helping people that really need it.
Yep.
Don't get me wrong. I get a lot of satisfaction out of $100 million too. Let's not be ridiculous, right?
Yep.
But I do, because I know you've heard this, but before, and it could be BS 8 times out of 10, but I really like helping people.
We
really like helping
there
people.
You
Guy
go.
doesn't like helping people.
No,
really
go with we.
But like I said, it puts a smile on my face every day to come to work. I'm never retiring. Unless I have a heart attack and die or something, I'm going to be here because I enjoy it. I'm not digging ditches, so I can do this a long time. Now, I got to watch that joke because I've said that joke before about digging ditches. And 3 or 4 landscapers called me. What's the hell's wrong with digging ditches? It's just a joke.
Your brother-in-law's got a very successful landscaping
company. It's a huge
company.
Commercial company.
Yeah.
That's different. All right, let's talk about one other thing. No, call us if you'd like said have any financial questions you'd like to take advantage of our no cost, no obligation written retirement plan, financial plan, or like a Social Security optimizer. Maybe you want the Roger Ibbotson report on index annuities versus bonds.
Very highly recommend that report. Don't
hesitate to call us 972-715-2424. Again, 972-715-2424. All right.
As we're getting into this time of high volatility, make sure your 3 buckets are right.
Absolutely. Let's talk about the importance and the cost of liquidity. Liquidity is one of the most important things I cannot emphasize more. You have to have liquidity. If you have relatives like I do, there's always a major emergency.
Don't they just call for your credit card? You don't need liquidity for that.
Oh, my God. It's got to be Western Union in the next 15 minutes. I'm going to be killed by the cartel.
I know.
So, if you have relatives like I do, at any moment could be killed by the cartel. Or
that's right. Or out on the street.
That's right. So out on the street.
You're just figuring this out now. What? Well, I didn't want to call you.
There is a need for liquidity. Remember, like I said, I looked at my neighborhood, and I was looking at one of the bigger houses in the neighborhood. It's valued, 7 figures, right? And I bought that thing at the crash, like 2008, like $300,000 worth, well over $1 million now.
That's crazy.
Cash is king. So liquidity is extremely important. Don't anybody ever tell you don't need to have liquid assets. You have to have liquid assets. But now let's talk about the cost of liquidity. Too much liquid assets can cost you a lot, right?
That's right.
I'm sorry, I didn't mean to interrupt.
No, that's one of the most expensive buckets, right? Because you don't make anything, you're losing into the opportunity to make money.
Now, the Fed did raise rates this week, another quarter of a point.
Yes, they did.
Now the Fed funds rate is what, 1.75 to 2? I still don't understand why it's always a range. It was 0 to a quarter.
And they said that the inflation rate's right around 2 where they expected, and all the pundits came on and said they're so far low, everything is way more money than a 2% hike.
So 1.7 to 2, that's the Fed funds rate. Everything's based on that. And so that's good. But your money markets, you getting 1.7 on your money markets yet? Anybody? No.
I've got one client that's you know what though, it's a former GE employee that's subsidized. You get like 4.5. It's like,
hey, that's a pretty good one. Can I get that one?
Yeah, I said no. I told him. He said, should we do anything? I said, no, that's where you need to be.
That's a good money. That's a good liquidity pot.
That's right.
But there's a cost of it. Let's say I got $10 million and $9 million liquid because I'm just in case. Well, $9 million earning nothing. What if you earn 5% on it? That's $450,000 a year you're just giving up.
That's the cost of it.
And so there is an extreme cost to liquidity. Some people say, no, in stocks, I am liquid and I make a fortune every year. That's absolutely right. Well, things are going good. You are. But if things are going bad, you not only don't make interest, but you're losing principal.
Yep.
Same thing, real estate. Real estate's going well, you're doing well, right?
Compounded by the fact if you're withdrawing off that stock account. Anyway, right. Real estate.
Same thing. Got to have those liquid assets, but the cost of it, you can't have too much unless you got a plan. Let's say, hey, I need this $1 million out of this $500,000, this $100,000, because I'm buying a rent house within 6 months. That's totally different. I'm not talking about that. Some people like keeping things. Remember, it says 3 to 6 months worth of expenses in cash. Well, I think that's kind of BS. I would like a year to 2 years worth of expenses in cash. Now, if you're 20, 30 years old, 3 to 6 months, perfect. You know how many people actually have 3 to 6 months? I don't care what age.
At that age? Well, at any age. I know, but at that age, for sure.
It's probably 2%.
That's not a lot of money.
No. But 1 to 2 years as you get older. It can't be the same rule for how much liquidity you need at 60 than at 20, right?
Yeah.
So keep that in mind. So you need some liquidity, but having any more than that can cost you a lot. Sometimes when we're talking to clients, sometimes you put a dollar figure to it. If you bring it down to a smaller figure, like a monthly figure, like one of them says, I'm just afraid to make it. I go, you got $1 million, you got 100,000 illiquid, and you got 900,000 liquid. Yeah. What if I said it's costing you $5,000 per month for that liquidity? Do you really need it liquid? Or how liquid do you need it?
Yeah, that much liquidity.
What if you take out 20% a year of it? Is that okay?
I just got a side thought completely off of what you're talking about. What we were talking about, fun phone calls to have with clients and how I enjoy helping clients that need, we enjoy helping clients that need help. It's always great to have and we try to set things up so it works this way, to have the call with the client when you're talking with them and they're well in retirement, you're just kind of going through things and making sure things are good, and you ask them, my favorite question to ask is, do you have more money? Can I try that again?
Yeah, go ahead.
Do you have more money coming in than you have going out?
Right.
And I've had several this week said, yes, we do. Right. We're saving off of our income.
That's good. That's got a old friend of mine, known for 30 years. He used to have a good line when he talked to clients. I've used it from time to time. But what they're doing is when they bring a couple in or whatever, they say, all right, for you two, when is life good?
Money-wise?
No, just financially, whatever. When is life
Trips,
good?
something.
Yeah. What is it? And that's what he bases everything off. And I like that attitude. When is life good? For some people like me, it's going to be working until I die, right? Other people, it's going to be, oh, my gosh, I want to be on the beach. I just want to read. I don't want to do anything else. I just want somebody fanning me, whatever. Feed me grapes, whatever it is. But that's how you can start there. Now, most of us can't achieve exactly that, but let's try to get as close as you can. And that's what we're here to help you with. Don't hesitate to call us. Remember, we've got the free Social Security Optimizer. There are 1,000 different ways to take Social Security, believe it or not. Even with the law changes they've had.
That's right.
Do that. Do you really know how taxes are going to affect your retirement? Remember, there's your Social Security is taxed several different ways. When you put it all together, what tax bracket does that really put it into? We can show you with today's tax laws exactly what you'll be paying to the penny. Obviously, taxes can change, but at least you'll have an idea. And while you have that plan with us, if tax laws change, I had it within 1 week of the new tax laws. 1 week. We can update that for you annually. Remember, all of that is no obligation, no cost. Don't hesitate to call us at 972-715-2424. Again, 972-715-2424. You can always go to our website, ilovemyretirement.com. There are videos on there, white papers on there. You can catch up on past shows. I'm Victor McClure for Guy Allard. We always appreciate your time.
The preceding show is paid for by McClure Capital and is for informational purposes only and not a solicitation or representation of any particular investment product or service. Any views and opinions do not constitute financial, legal, or tax advice. Consult with your appropriate professionals before making any investment or savings decisions. Always consider your risk tolerance, time horizon, and objectives in making any financial decisions. There is never any guarantee of future success or performance.